we're up about almost over 6% this week. And from the way we actually saw demand and supply in the market today, we are not showing signs of abating from what the trend we've actually been seeing over the past couple of weeks. Don't let's forget, we have global markets trading around their 18 months high, but yes, we are still trading around our 9 months high. So I think there's still lots of room for appreciation, and of course the results that have been coming have not been too bad, and of course the dismal interest rates in the market, money markets rates is also still giving some investors confidence that we continue to see much more buying in equities market.
Well, Olatunji, what's going to drive market sentiments next week though?
I think we are still expecting a couple of results. We've seen some portfolio managers also still trying to fill their allocations, and I think generally we are seeing some level of confidence coming back to the market. Like I said earlier, the not too impressive interest rates that's been obtained by investors in the money market have not been too attractive, and we've actually seen some investors moving from the money market segment of the financial markets to the capital market segment, and I think we'll probably continue to see some positive improvements going forward. And let's not forget, the first quarter of the year is also gone. We have quite a number of results coming out. The banks, we've actually seen 3 of the big 4 banks release their results. That means technically we're also expecting their Q1 results as well. And if you look at the way the results came in, from where we were in the third quarter, they actually were either in line or beat some investors, some analyst expectations. And I think that will probably continue to impact the market positively in the coming week.
Well, what do you think should be done to maintain the confidence that's in the market currently?
I think the transparency that's actually being put in place as much as possible by the CBN governor will continue to actually go well with the market. We've seen results come out as and when due. 3 months after the banks, 3 months after the year end of the banks, we've seen the results actually trickling in, and we still expect more to come in the coming week. If the results are coming in as and when due, and of course the quality of the reports are in line with what is obtained internationally, I think we'll probably continue to see some increased level of confidence in the market generally, because we know that information actually drives the equities market.
So a lot hinges on the results coming out of the banking sector. But let's take a look at those results that came out of Starcoms. What do you make of them? Are you positive on Starcoms for this year?
Starcom has a peculiar case. Although we saw gross earnings actually coming in relatively flat, the company actually declared a loss of about 7.7 billion. Compared to about 8.4 billion sometime last year. If we look critically at those results, you'll notice that the company actually, I think they paid down part of their, as they said earlier on, they paid down part of their foreign exchange, with some they refinance their foreign denominated exchange loans with locally sourced loans, and because of that, we actually saw interest rates inch up in their financials. Secondly, they also had foreign exchange losses as a result of actually converting those loans back to naira, and taking all those things taking all those things into our view, you will notice that it really actually went terrible for the company. But looking at the EBITDA, the company actually made about 7.7 billion in earnings before interest, tax, and depreciation and amortization, which I think is a very good thing, about over 700% growth over last year. But then depreciation also remains a key limiting factor for the private telecoms operator. They had to write down about depreciation of about 7 billion, which also affected their operations negatively. We think if they can actually scale up their level of operations and of course look for ways of actually sharing the cost of their infrastructures, I think there is still room for growth for the company, but a lot still has to be done. There still needs to be some sort of restructuring for the company to actually return back to making positive in the future.
All right, and just quickly, in the banking sector, are you positive on the results that's coming out of the banking sector?
We've seen UBA's results, we've seen GT Bank, and we've seen Zenith. Those results were actually in line with investors' expectations. We know that UBA was actually on about $7 billion as at their third quarter end. We've actually seen, that means we've seen some level of write-backs from their operations, and as well trying as much as possible to maintain their loan books. Going forward, initially a lot of banks were not positive regarding growing their loan books going forward, as at the time when the audit was being carried out by the CBN governor. But speaking to the representatives of the companies, the CFOs, they are all looking at actually growing their loan books between 10 and 20% in this current financial year. Looking at the GTB results specifically, in the final quarter of last year, we actually saw GT Bank growing its loan book by as much as between 20 and 30%, which I think it's a very good thing. We don't think the yields on those loans have actually been factored into their results, but going forward, by the time we are seeing their Q1 results, we probably expect to see some level of improvement in the performance of GT Bank. I think the same thing goes for Zenith. We don't expect to see much of write-downs going forward. Knowing fully well that the market has actually recovered to an extent, then we would expect some level of write-backs as well from some of these banks. If we factor all these things together, then we will expect to see some level of improvement in the earnings of the banks generally.